Morning, guys. Good morning. Dead cat bounce. Maybe. The reality is our market hasn't really gone down that much, right? You look at the NQ, and it just really hasn't gone down a ton, right? Consider where we're coming from, right? Those April lows, right down 5%. In an ideal world, we go lower. In an ideal world. But who knows? The real question I would ask yourself is, instead of really focusing too much on the market and saying, is there going to be a dead cat bounce, or, what stocks are set up to go higher, right? Where's money going? I think that's the best. That's the best thing you can focus on. Right? Don't worry so much about the market, unless, of course, that's what you trade. Like if you trade the NQ, or if you trade the ES and the S&P 500 or the SPX or the Russell, and then it becomes a bigger interest of yours. But if your focus is on individual stocks, then where's money going? Right? That's the question. Where money is going is healthcare, industrials, maybe not so much industrials over the last month, but they look pretty good, and energy stocks. Yeah, here's the thing. Even with that thinking, like we could do with one more big flush. Yeah, I would love it if the market went out 10% from highs. I think that would be a pretty awesome scenario. And then, what's holding up best at that point, right? Again, what's holding up best on my screens is healthcare, industrials, and energy. And, those aren't really the ones that I dying to be trading. Let me send this really quick. Um, LUMN at the moment is not that great. Yeah, LUMN at the moment is not that great. And an undercut and rally of what? Of this up day of what is this earnings day? 1030's low. I mean, if you want to play it as a UNR of that level, like I could understand it. What level is this? 814. But ultimately, there are better stocks within the group. And I want to say I was scanning for them yesterday. CIEN is one of them. And LITE, I believe, is in the similar sector, is another one. And they're just not that tight, right? These things have been in some massive uptrends. They just need longer bases, similar to what you got here. At least 3 to 5 weeks of sideways would make the most amount of sense. I don't know. And here's the thing. Let me move my camera. The reality is You don't have to know either. When the market starts to bottom, do you think money will rotate away from those sectors and back into high growth ones? Here, that's the reality. You don't need to know the answer to that question, right? And neither do I. What you need to do is every day when you do your scanning process, ask yourself what looks best, where's money going, where's money leaving. If it's correlated to the market, then you want to wait for the market to start to turn back up. But if it's showing relative strength, make sure you have your eyes on it for when the market starts to turn back up. Like me guessing and telling you, do I think money's going to go there, and just be like, yes, I do. And then all of a sudden I'm wrong. And then I'm telling you like, well, no, money was going to healthcare and that's where it continued to go. You just never really know the answer to that question. Kind of the way my brain works, and yours doesn't have to work the same. But I always like to tell myself, like, where's money going? Where's money leaving? Now, at least I've got that understanding of what I think to be the places where that money's going. And then secondly, how do I like to get involved in the places where I do believe money is going, right? How do I create my entry tactics to kind of mold to the environment that I'm in? Because I believe that this particular sector might be going up. Right now, how do I get involved in this? Right? Are they actually showing 3 months of relative strength, 6 months of relative strength, 30 days of relative strength? If they are, okay, great. I know that back of mind. I know that anecdotally, and with charts, that they are performing better than a lot of other groups in the market. Now, how do I get involved? Right? I don't have to know, because like once I'm involved, and then I've trimmed some off, I don't do anything with it anymore. I just let it work. I just sits in the portfolio, and it's just trending above maybe a 20 or a 50 day or a 10 day, depending on how well it's already been working for me. Yeah, money's been going nonstop to Argentina. Yeah, that's some of these charts definitely say that, like YPF after that gap up. GGAL is another one, maybe not as clean. Um, BBAR is another one, a banking name. TEO, BBAR. They all look, very, very similar. They all had the gap up. They've all just kind of been consolidating, some a little bit better than others. Yeah, I don't know that there's a whole lot for me to do out here either. We are going into NVIDIA's earnings. I did something smart last week. I covered some of these big washouts, in pre-market, and then this bounce didn't really bug me. And if they can just digest or something and then continue to roll over, that would be awesome. But on the flip side, where's money going? And that's kind of my attitude right now. I did my job on the short side and already paid myself, like even in a name like Oklo, right? I was shorting this thing in the 140s, and we are now sub 100. So, I did my job. I paid myself. I got these 30, 40, 50% moves on the short side. There's nothing really left for me to do at the moment. My only long even is NEM. So there's a chance that I'm not even sitting in this one here long, if it takes out $84. So yeah, there's not a lot left for me to do. Wait for setups. That's it. And there's not a bunch of them. No, I haven't talked about AMD, but with NVIDIA earnings on deck, I don't know that this is one that I would be playing. I mean, is it possibly just building some higher lows here? Maybe. Um, But I don't really know the answer to that question. And with Nvidia earnings on Wednesday, probably best for me to do nothing at the moment. Do I think QD is ready to go? This thing trades $1.3 million a day. I don't know who exactly would be trading this thing, but it's definitely not an institution. Maybe. Could be wrong about that, but not a name I would be trading. I mean, it's nice and tight. I'll tell you that. Yeah, MPC, VLO, Dino, XOM, PARR, DK. Yeah, I mean, these names are just, it's not just MPC. There's a lot. There's even more. There's like INSW, STNG, FRO, TNK. These things have all been in very, very steady uptrends for the better part of 3 months. So is ENTA a good setup for a small account, or is it too barcodey? ENTA. Yeah, this is trades $4 million a day. Avoid stuff that thin, right? You don't really want to be in names that only trade $4 million a day. B definitely still looks better. I tried being in Barrick. I tried owning this one on 11.3, but I just didn't widen out my stop enough to the 50-day, unfortunately. And then this thing ended up just really, really pushing nicely. And it does look better than NEM, but if a Barrick were to continue to work, I would suspect that NEM will also continue to work. When I short something like Oklo, what's my preferred method? My absolute preferred method of shorting something is into declining moving averages, right? That's my preferred. Or a break of a key moving average is also fine too, especially if it's got somewhat of a defined setup, or when it's breaking through, it's also breaking through maybe a prior day low, something like that, where it's also breaking through that moving average and you've got like a defined risk right at highs. But I prefer to short against a declining moving average. Much, much easier. No options. Guys, options, I don't know who needs to hear this, but options are a fool's game, okay? They're a fool's game. If you want me to explain to you why, I can. But oftentimes, like with stock trading, you have to pick the stock correctly, right? And you have to pick the direction correctly. And I make money doing it, but it's difficult to do because I'm actually wrong more often than I'm right. Now imagine you're wrong more often than you're right, and you could still make money. But now with options, you not only have to pick the right stock to trade, you have to pick the right direction. You have to pick by what time it's going to do so. You have to pick what price it's going to get to. You also dealing with implied volatility, right? So it's like you're dealing with so many more factors against your trade. Most people, they can hardly get the correct stock to trade and the direction it's going to go in correct. Now imagine you also have to pick what price it's going to go to, by what date it's going to go to. And if it doesn't start to get there, super fast, then you start to deal with decay on your contract, and then implied volatility can make it more expensive to trade, that contract. There's just so many things designed against you when you're trading options. It's like the allure of the 500% gain when you see it on social media. But the reality is 99.5% of people that show you their options trade on social media, you know what they don't show you? How many contracts they have open. Okay. They just show you the 500% gain with their whopping one contract. Okay. So they make already meaningless money. Most of these people do. And I always kind of joke, like, you know who makes money trading options? You don't. The only people making money trading options are the people teaching you how to trade options. All right. Let that sink in. Okay. And there are people out there, and I'm not going to name names because I'm not going to, that's not my style. But there are people out there who buy a put or sell a put and buy a call, and it doesn't matter which direction the trade goes in. They just show you the winner. Oh my God, 300% banger today. And that's all they're going to tell you. It's a total joke to trade options. It's very, very difficult. It's not, people pitch it as a way to get rich quick and then try to teach you how to do it, but they're not successful doing it themselves. It's very frustrating to see, people kind of fall into those sucker scams, but it is what it is. Lyft, very, very interesting. Love the strength this thing has been showing. I don't see a setup for me. I thought maybe on 11.6 looked pretty good. Yeah, many oil and gas in the scans. Well, thank you for being there. One, do you go over your screening and focus list? Yes, I go over, and I can make some more videos in the room for how I scan, just using a simple scanner through FinViz, multiple of them, and kind of go over how we build them and stuff like that. That's not an issue. But I do go over my focus list and my watch list video every single day. You'll actually see a channel for it in the room. You're having the most trouble trying to focus on a few names per day. That's because your focus is kind of everywhere. Your focus needs to be on where money is going, right? And believe me, if you're new, it's difficult, right? Like I just said, you have to pick the right stocks to trade in the right moments to try a hop aboard. Right now, the reality is there isn't a ton of great setups ready to go higher that are in, the tech space. But do you have maybe, a few alternate entry tactics that you could use if the market starts to turn back up, to buy NVIDIA or an AMD, et cetera? And we'll talk about those. So just be patient with me and be patient with yourself while you learn. Fix, yeah, this has been a nice name for a while. Comfort Systems. Yeah, a little too choppy. I mean, if you were prepared for it and anybody was showing up to buy on Friday off of the 50 simple moving average, I think that's fine, but you had to really be prepared for this kind of setup on the gap down. So yeah, I kind of talked about these industrial names. So if you guys kind of look at RSPN, which is equal weighted ETF for the S&P 500, you'll notice industrials, and you'll kind of notice some names that are also, they've just gone up and then are kind of building out. And RSPN is one. JB Hunt has had that gap up and also kind of, holding sideways up here above the 200. CHRW is another one, but a little bit on the slower side. Again, do people really want to trade this CHRW? That's to be seen. FedEx has finally started to uptick, a little bit in a trend back above the 200. But again, is that something really people want to be trading? Cummins is another one. What is this? CMI. So yeah, industrials have been working really, really well. And I kind of highlighted that in last night's watch list video, but they're really not a bunch of stocks that I'm going to be trading. CACI, this looks pretty good. It looks good. It's not super. I mean, look, it's not the fastest. It's not the most crazy hyper liquid, but not bad. Almost just based on this action, is this a biotech? I'm not sure. Biotech's been killing it. So is healthcare stocks. Information technology. Ain't that something? Unexpected good looking chart there, huh? EPS steady growing since 22, sales steady growing since 22. Very nice. No, I don't switch to a day trade. The reality is that day trading and scalping doesn't move the needle in my portfolio, so I just don't do it. Right? Like, yes, sometimes there's a great opportunity and you can make, I mean, a lot of money, right? 10 grand plus on a trade really quickly. But it's just not really moving the needle in my portfolio. So I don't put my brain cells there, right? I don't like that instant gratification, like that dopamine hit of like, just making a quick 10 grand. It like doesn't satisfy me. So my job is to continue to focus on where money's going, where money's leaving. And if the market is going down, I can short too, right? I've been short, Lorena, right? I've been literally sitting short in Cypher since the high, the day it put in its high at 25 bucks, right? And then you catch a almost 50% fade, 40 plus percent move down. Um, that's satisfying enough. Trust me. Like, this is kind of what I'm after. And it's likely that, we could get a bounce, a rebound, some chop sideways, and, is getting positioned here for a short the right idea? I don't think so, but we'll see. But yeah, I don't just like switch my mentality over and become a day trader, right? It's just not going to meaningfully move the needle in my portfolio. I'd rather just do nothing and just wait for another good opportunity. And I don't care where that opportunity sits. Long or short makes no difference to me. Selling premium is how to make money in options. Yes, sure. Until there's like a 3.5% down day in the market, and then you just gave back half your year of work. But yeah, I mean, selling premium is definitely a way to do it. Danny, you'll have to ask that question again, brother. I don't know exactly what you're trying to ask. Should you ask what you just asked again? Yeah, definitely. Yeah, nat gas. This EQT has a big base too. If this thing would just tighten up a little bit, just a little bit, please and thank you, this EQT could be great. Nat gas stocks. I think nat gas is going to be the way that we power these data centers um, until further notice. Honestly, until we get other methods of energy production. Thanks, Campo. I appreciate you being there, sir. The market's going to be launching a Black Friday sale. God, I hope not. But yeah, there'll be something, Max. Long GDX. I'm already long NEM. And I did an awesome job not being greedy and paying myself into this first day gap up. And then I paid myself a little bit more on Tuesday, and I paid myself, almost at the highs on Wednesday. And I'm just settled into my position already. There's really nothing left for me to do here with gold. So can we talk more about rotation? How do we track it more specifically? One of the ways that I like to track rotation is I just like to use equally weighted ETFs. That's a good way to do it. It kind of speaks to the broader group without, there being so much influence from just one stock. Equally weighted ETFs is a very, very easy way to do it. Let me see if I can. I wish there was a way to extra camera, video file, stop screen. Yeah, I don't know. I'll have to try to come up with a way, or maybe send out a tweet or something, or post something on YouTube about it. or make a video on YouTube for X as well. I'm kind of talking about the equal weighted and why I put so much importance on them. But yeah, equal weighted ETF. So like RSP is the equal weighted S&P 500, right? Which really hasn't gone anywhere for, the better part of 3 months, right? Literally just in a complete sideways range. Well, I also look at equal weighted parts of the S&P 500, and that just kind of helps me gauge what's acting best within the S&P 500. Um, it just makes it a whole lot easier. So you're not just looking at, the SMH, for instance, and then it's just got so much influence from 2 or 3 stocks, or even though the SMH for the most part has been, run up by quite a few names, but similar with healthcare, right? It's like multiple stocks within that group are acting well. It's not just being influenced by one. NBTX too thin. I mean, it looks fine. It depends how you interpret this, right? Is this a bear flag after a, kind of a crummy move down? Or is this just surfing the 50 simple moving average before continuing higher? Right? It depends how you interpret it. But this thing trades $2 million a day. There's a 0% chance that I would ever find myself trading this kind of stock. So I think Barrick is interesting. I tried to buy it. I got stopped out the day after I bought it, and I own NEM. So I like gold, but obviously gold's not acting the best at the current moment, although it is above 4,000. This strength in CSIQ is nuts, but it's not buyable either. It's way too extended from the 50 simple moving average. CSIQ is 10.88 times from its 50 simple. So that doesn't work for me. I don't buy stocks more than 4 times their ATR from the 50. No, I use intraday low, not pre-market low. If it's a very, very tight and slow moving chart, I could even use prior day low. But again, that would me be trading like a name that is a little bit on the slower end, like sub 3 ADR maybe. Any favorite books or materials on teaching that shorting? Shorting with the O'Neill Disciples by Gil Morales. I think it's a pretty good one. But ultimately, you have to execute. Like you have to show up and execute, and then that's really how you're going to learn. Right? No book is going to teach it for you. You have to show up in real time and take some trades. What scans do you run to get tickers? What relative strength number do you use? Well, I'll go over those tickers, but they're equally weighted, and I'll go over them tomorrow, if that's all right, and then I'll kind of talk about that a little bit more in depth because I will run out of time talking about it today. But if you are in the room and you bug me, I'll post I'll post a list of all of them if you're in the room already. Otherwise, if I talk about them here, I'll definitely run out of time. What relative strength number do you use? Yeah, I don't use like a number, right? Like market surge, it's like it's got to have a relative strength of like 85 or above, right? That's not kind of what I think about. Relative strength for me is like I look at it as like group over group and, over 1 month, 3 months, 6 month, what groups are showing the most relative strength. That's kind of my thinking. Yeah, this RCUS. Yeah. Biotech. The only thing I would say about biotech is make sure that you know a few things. If they've got any PDUFA dates, if they've got capital on hand, right? The last thing you want to do is get yourself into a biotech and then they just do an offering like 30% lower than where current price is. So, and then size right? You have to size biotechs right. Because they can gap down on bad news. Thoughts on Baba? Yeah, there's nothing to do here. So, nothing to do. At least not for now. It's below the 50 simple moving average. I mean, gapped up last night on the news that it had, but not enough to get me in. Thoughts on the steel sector? So you have STLD, I think, is acting the best. And then it's really just going sideways here, which is great. Do I plan to buy Tesla soon? Not yet. Not yet. So I closed it at like 420-ish bucks, if I'm not mistaken, 421 or 420. And yeah, I've just kind of left it alone since. So I didn't have to sit in this ass kicking all the way down to 380. Right. So there again, there's XLK, there's XLF, there's XL, and I do look at them, but some of these are going to have larger weightings. Okay, so you've got like something like the XLU, right? And the XLU is like, which is utilities, like almost 13% of its weighting is in NEE. Right? So that's not necessary. Now this looks good, but this is going to make the XLU, look a little bit better than even I would want it to, right? And that's not a problem, but I want to look at things that are equally weighted across the board. So I know that there's broad participation within that group, right? So hopefully that makes sense. Like I need there to be broad participation across the group. So, if you look again, another example, right? You look at the XLF and you'd be like, oh, you know what? That doesn't look too bad. Well, Berkshire Hathaway is 12% of that ETF. JP Morgan is another 11, right? But then if we look at RSPF, which is equal weight, right? It'll paint a little bit different picture, right, of the entire group. And really, Berkshire, only until as of late, has started to uptick. I mean, Berkshire really hasn't been doing a whole lot. So, yeah, the thought there is just equal weight. I don't want any one stock to have too big of an influence on the entire group because one stock could be holding up the ETF, and then it confuses you into thinking that that ETF is actually acting well instead of the whole ETF looking great, but you're looking at equal weight, and then there's broad participation within that group. Am I looking to short gold? It's funny that you say that. I actually shorted gold really well. I shorted gold I shorted via Nugget and at 185 bucks. And then I covered some, really, I got out of my position on 1022. And then I longed it on 11.7, not Nugget, but NEM. So I'm not bearish on it at the moment. I'll be more bearish once I'm short. But I'd have to get kind of kicked out of my NEM. Day trading, in my opinion, isn't necessarily more efficient. You guys would think it's efficient, but if I'm not mistaken, and I'd have to like almost look this up, but I would almost wager my own money that swing traders survive a whole lot longer than day traders, right? You learn a lot of bad habits to make money while you're day trading, which namely has to do with your patience and your position sizing. And you're always fighting near your average. So day trading is very, very difficult because whenever you go to get involved in something, like just imagine for the sake of discussion that you were a day trader and you bought this breakout in Hood, right? And you bought this breakout because you noticed it was breaking out of earnings highs, and you bought this thing at 52 and you caught a 4% move and you sold it at 54 same day. How absolutely like shit you think you should feel that you missed this beautiful trend. So a swing trader is going to crush you every single time even with just small size, will have ended up making so much more. And then imagine being a day trader and like every day you're basically trying to trade this trend. And then you come in the next day thinking you're going to get some of the similar action. All you end up doing on the second day is chopping yourself up into pieces that you don't even want to deal with it on the third day. And then maybe you do because it's gapping up, and then you just chop yourself up again because it gaps higher, falls lower, wicks back up. Like, dude, it just becomes, trust me when I tell you, it's very, very difficult to be a day trader. It just is. Is it doable? Absolutely. Can you make money doing it? 100%. Is it for everybody? I don't think so, at all. So and you end up dealing with position sizing issues because you're trying to make money on a smaller time frame versus, you sit patiently in something like this and you put 10% of your portfolio in there and you end up catching not even the entirety of the trend. Like, you just catch this as a trend. Your portfolio moves 10% and you literally had no size in there that would make you uncomfortable at all. And if you just waited until it closed below the 20, like an actual close below the 20, I mean, you might be in this thing for a while. Might have been on 8-1, or it might have been you didn't even sell it on this day here because it was still above 8-1's low. I mean, dude, you end up catching much, much bigger trends with way less stress. But again, to each their own. I'm not saying day trading is impossible. I'm just saying that 90% of day traders fail. And there's a reason for that. How do I enter trades regarding position size, progressive exposure, or X size, and then selling into strength? How do I enter trades regarding position? Well, most of my position size is usually like almost 90% of the time, sub 10% of my portfolio, right? It's about 10% of my account on any single trade. Sometimes it's a little bit more, but it has to be like a super, super liquid stock. And then I don't use progressive exposure on a single stock unless I'm trying to make it intentionally a bigger position. I use progressive exposure on my portfolio so that I don't ever endure a big drawdown. And then I like to sell some into strength and then just trail the rest on ascending moving averages. I talked about SNDK on last night's watch list video. That 268, 270 level is definitely the spot to be watching. So, and I talked about kind of the why. So 268, 270, you found some support on this name, right? Wednesday, right? This is where it's kind of came down and then it's just grinding, higher basically all day. On Thursday, this thing started to break down and it also found resistance against that 268, 270 level and then broke down. And then for anybody who is paying attention on Friday, if anybody wants to guess where this thing hit almost to the T, 268, 270, and then started to roll over. And then now you're kind of gapping down in pre-market. All plays like NBIS, NBIS, Iron, Cypher, and they could eventually find a bid, but I don't really see a reason to kind of hunt the bottom on these things. What will I be looking for before going to play them again? They're going to have to show relative strength versus the market. Meaning the market might be going down and these names are going up. The market might be going sideways. These names are going up. The market might be going down and these names are going down less than other names in the market, right? That just tells you that institutions are no longer selling them or they're accumulating them on market up days or not selling them on market down days or selling them very, very little. So yeah, I'll have to start to see some relative strength and it'll have to be for more than one day and it'll have to build something structurally that gets me interested where I can limit risk. It's the important part. Will I go long on a stock that has moved below a 50-day moving average? No. Like 90% of the time I'm avoiding stocks that have lost their 50 simple moving average. Unless you get a really, really sharp move into the 200, and then I think that there's an opportunity to play a bounce there. But most of the time, that's not even a trade that I'm focused on. Yeah, I get asked this quite a bit. The arrows on my charts, whether they're on a smaller or larger time frame, is just a histogram with a MACD. So I don't like to have like another box down here showing MACD, so I just use a little arrow. So when my 6 period crosses below my 20, I get an arrow. So easy to kind of keep the charts a little bit cleaner. When do I think might be a good time to enter Meta? Think feels like it has been oversold the past week. Thanks. Well, when you're looking at Meta, why would you be interested in buying a stock that's effectively below its average price over the last 200 days? So over the last year, the stock has effectively done nothing, right? And how do you know just because it's oversold, and it could very well be, why would you want to own a stock that's oversold? Can't it get more oversold? Let me show you deck. When deck lost this 200, are you going to come on stream and be like, Ariel, what do you think about deck? Is deck not oversold? And I would have given you the exact same answer. You just gapped down on earnings. You just lost the 200 simple moving average. Avoid it, right? Otherwise, this can happen to you. And you keep trying to bounce Meta like it's oversold. Why are you focusing on names where money is leaving instead of putting your attention where money is going, right? Your institutions are literally leaving Meta. You don't know when that's going to change. Is there maybe a trade opportunity to bounce it for a day or two or three? Yeah, maybe. But over the last 200 days, money is leaving Meta over the last 200, right? Hence the reason it's below the 200 simple moving average. And you're fighting what the big boys are doing and big girls, right? The institutions. Don't fight the institutions. They are leaving. On CSIQ, you measure how many times ADR over the 50 ATR. I measure average true range. I closed my Tesla. Yeah, I closed my Tesla before it had, that nasty down day. So, or really on the nasty down day. I just closed it below this Friday's lows, and I closed it right like $420. So there's nothing really for me to do here at the moment. This is now just needs a cleaner setup. Netflix short on the gap down. Oh, I like that they did their split. No, and I actually talked about this one on Thursday for anybody who was in the room. I actually talked about a rejection of prior day high. To me was actually a pretty good short opportunity. So like right through here on this day. So like shorting as it was starting to break down right in here, using this as the high. I don't know about shorting it here at the moment. Maybe, but shorts into declining moving averages, much better. Yeah, CSIQ, yeah, still 10.88 times its ATR from the 50. No, I don't reference MFFI. Thoughts on LQDA? Yeah, it's holding up well. I don't really see, such a clean setup here, but, could be a cup and handle setting up. Maybe through Friday's highs. Yeah. Don't know that I love this setup, but no, I would just kind of leave this one alone. At least for now. It's extended from the 50, but a little liquid. So the way I kind of was looking at Cypher was just a rejection of this day where it traded super high volume, right? So this thing traded really high volume on earnings and put in its high 25.11. All I did was come in short the day that it tried to take out 25.11 and then failed. So all of a sudden, this thing has this big morning ramp up right into that level, 25.11, and then started to fail, right? And just literally just this is a pretty big ramp up. out of nowhere, 12%. And at the worst, I was thinking, okay, I could short this thing against that 25.11 level and then set my stop at high, and play this for a bit of mean reversion. Like at this point too, we were pretty extended from the 50 simple moving average as well. So there wasn't a clean setup to go long here, right? Like not up here. And so I literally got short right on this 5-minute bar, 25.06 with my stop at highs. It did try to knock me out a couple times, but it did not take out those highs. And it tried to do it again. And then even in after hours, tried to do it again. But, all it ended up doing the next day was just failing. So that was it. Pretty straightforward trade, to be honest with you. Shorted against these highs that it traded on earnings. A couple days later, short against those highs, and then just be patient. Iron was a really nice one too. I just missed it. 24.15, got this high right here, and then you go and revisit it, and then you just kind of fail on the backside, right back through that level. It depends what I'm buying, but I do like buying pullbacks to ascending moving averages. Am I ever 100% invested with my account? Not often, but sometimes, but not often. No. So when the index breaks the 50 simple moving average, normally you'll have already had a few short opportunities. And you obviously want to make sure that you've been able to execute on a few of those. And then, once the market starts to make like a 8 to 10% move down, I start to really focus in on what's showing relative strength, because when the market gives a follow through day, then I actually start to go long. So, and if I can't gain traction on the long side and I'm only gaining traction on the short side, then I continue to use progressive exposure on that side of the market. When is Thanksgiving? Next week? So maybe this weekend. What do I think about EOSE? People got suckered into buying this one on the breakout, and then it just completely failed. And this one also ended up being a really nice double top short sale as well. Hit that level and then just completely rejected from there. Earnings today, gapping down. We'll see if this thing ever tightens up. What is my total portfolio risk, or how much do I have fully invested? I could be 100% invested but have no open heat, basically. Meaning I could have already de-risked all my positions, and no matter what happens, right, those positions will be in the green. So it depends. Like a risk on a new position might be, a third of a percent. Right? It's very rare that I'm like risking 0.5% of my portfolio. It's like hard to do. That just means you don't have tight enough entry tactics. That's all. Or you're oversizing positions. Yeah, money's flowing into healthcare, industrials, and energy. Not really groups that I want to see myself trading. Anyway, guys, much love. I got to get my butt rolling. Hopefully you guys all have a super, super awesome Monday, and I will see you guys bright and early tomorrow morning. Thanks for being here. Great questions today. Cheers.